Hi, welcome to today's session. I'm so delighted to be talking to Lauren Dillard, who is the head of the Global Information Services business at NASDAQ. Lauren, do you want to introduce yourself to us, and then we can talk a little bit about why we're talking about NASDAQ at a real estate tech conference?
Sure, I'm happy to, and I'm so pleased to be here with you today. So this is going to be great fun. So I'm Lauren Dillard. I joined NASDAQ a year ago in June. I spent most of my career at the Carlyle Group, which is an alternative asset manager. My last role there was I ran the investment solutions division, which is the secondaries, co-invest, and fund-to-funds division. Before that, I had done a variety of things, one of which was working on the Carlyle Group's public offering. So I worked closely with Adina Friedman, who was the CFO at the time at Carlyle, who is now the CEO at NASDAQ. I also serve on the board of SL Green in the city.
So I think you're giving us a bit of a sense, but I'd be really curious to hear more about how someone with your background and experiences decided to join NASDAQ, which I think most of us think of primarily as a stock exchange.
Yeah, absolutely. I mean, NASDAQ is an exchange that's core to the business, it's core to the brand, and we invite incredibly innovative companies to list on the exchange, and there's transactions associated with those companies. But really, when Adina took over as CEO, she made it a deliberate effort to reposition the company as a technology and data company, which it is. So NASDAQ provides technology to over 120 markets around the world. And that's everything from exchanges, some of which we compete with, to a whole variety of other markets, healthcare markets, the UK football index. We just announced that we're providing our matching engine to a real estate platform called Lex. So really, we provide technology, and we're the underpinning of technology to markets everywhere. And then the second piece of that is the importance of data and analytics in the sort of all across the industries as we go forward. And that's the GIS business. And so what attracted me and what I find really, really interesting is that across what I would call the investment management landscape, irrespective of asset class, you're seeing automation and digitalization and the need for data and analytics to make those markets more efficient. And fundamentally, that is what GIS does. Its North Star is providing data and analytics and transparency to the investment community. And so everything we do hangs off of that.
Yeah. And so can you talk a little bit about GIS in particular? Because I think some of what you're doing there is really interesting for us in the real estate world.
Yeah, absolutely. So GIS started really as a data business off of the exchange. That was the core of the business. It also has a very large index business. So we can talk about that as well. But really, as you think about the evolution of GIS, we've taken it from being data around trading to data in a whole host of other areas. Everything from alternative data, where we find signals out of large, massive amounts of data from companies, to data and analytics within the investment management space. So we have a very large research database for institutional asset management. We have an analytics platform for private equity. And we recently acquired a portfolio, a cloud-based multi-asset class portfolio solution called Solovis. So really, when you think about it, our North Star is how do you provide data and analytics to provide transparency for investment decision making. And so like if you stick with that as the North Star, everything else sort of falls off of that.
It's really interesting because I think so many people associate NASDAQ or the other exchanges with publicly available information or public trading of information, but really GIS is a business that touches more on what we might think of as opaque or private markets. And I think because of that, you have some really interesting kind of lessons in terms of markets overall. So I'd be curious, I mean, maybe just to start out with a bit of a discussion about markets and data in markets and the way that you think data can be valuable for markets. I mean, some of this is obvious, but actually you have some deeper insight as well.
Yeah, I mean, if you go back to the equities market, which is the most mature market, and the genesis of NASDAQ was actually around transparency and digitalizing trading back when you still called your stockbroker and you still had paper. And app trading partial shares at, for virtually no cost. So, I mean, that's a very mature evolution. And And in that case, it's a lot around the actual market itself and the velocity of trading, and it's billions of messages that are matched. But really, when we look at markets as they mature, they either can mature from the transaction side, or they actually mature from what I would call the digitalization of the workflow side that then drives transparency into data. So that's why the core of what you see, and you see it a bit in private equity, where the underlying data and analytics become really important versus the actual velocity of trading. So it's not just from the market side, but also the workflow and data side. And that is exactly what we do. I mentioned the investment business, but it's an interesting way to think about kind of the same issue at hand. 15 years ago when that business, 20 years ago when that business was founded, the advantage in data from an investment consultant's perspective was actually gathering the data. And then what happened when they made that ecosystem is they said, look, collecting the data shouldn't be your business. Your business should be advising on where to invest and how to make the best investment decision. So let us collect the data. And now we have this contributory model that has, 1,000 investors, asset owners, whatever you want to call them, limited partners, looking in to actually look at what's available. And then you have all of the institutional asset managers contributing their data so that you can see where you are in the funnel. And then there's a bunch of analytics off of that. You can see how you compare, you can see where you fell out of a mandate. And then from an asset owner's perspective, that you're looking at a set of data. So that fundamentally you end up making investment decisions rather than gathering data. I mean, that's kind of our thesis. NASDAQ is not an asset manager, right? It is literally a technology and data provider. So providing that transparency can facilitate where people should be focused, which is what is the best decision for my portfolio? How do I rebalance my portfolio? What do I look at? What is in the market? How do I compare these managers in the market? So that's a little bit of how we see maturation of markets, and they obviously all are at different phases. But we certainly see that in more opaque markets. It's not the actual collection of data, but it's like what you can do with it.
Yeah, but so I'm interested to talk to you about, you obviously started your career as an investor, and have, worked with both investors and LPs. So I think one of the things we've seen in the real estate market is that for some structural reasons, both the data is difficult to collect and maybe the players around the table resist the collection. So I think the investment business is a really interesting model. Like, what do you think it is that actually motivated the different players to decide that it was more valuable for them to contribute? Because I think there's been historical resistance to that.
Yeah, well, first of all, I should marginally correct you. I started my career as a tax professional, so I'm actually a tax professional. So no, but in fact, data was an issue in tax too. But I certainly saw firsthand the need for data collection. I mean, if you think about the private equity secondaries or the fund of funds business, by default, you're investing in managers that are investing in funds with portfolios, so you're collecting loads of data.
Yeah.
So just to clarify that, but when I think
historically, that data has been really internal proprietary data that people kind of guarded, thinking that maybe it was a differentiator for them.
Yeah. So I think that when you're on the precipice of the investment, whether it's the allocators or whether it's the investors or whether it's the institutional asset managers or the private equity firms, that whole landscape, you have to decide if your business is collecting the data or if your business is actually making investment decisions on the data. I think that, you're at a precipice, to your point, of people wanting to hold back the data when you're at the moment you realize that collecting the data is not the advantage. Your advantage is actually what you do with it. We're certainly seeing that on the investor side. So when you think about whether it's a limited partner or an institutional investor or a retail investor, they're wanting to compare the data at an even playing field. They want to see it. And frankly, if you think about retail, they want to see it in a fairly inexpensive form. So you would certainly see it from the investor side, wanting standard data to compare across their investment decisions when they're rebalancing their portfolio. That's what they're looking at. I think on the asset manager side, there you have to decide, is your alpha how you interpret the data, or is your alpha actually what data you have? And by the way, I think there are probably some players that the alpha is the data they have, and understand that. But broadly speaking, for a very transparent market, which is what NASDAQ seeks to provide to marketplaces everywhere, you have the same data and your alpha is actually making the decisions.
Yeah. So how could you imagine that actually working in a market like the real estate market? And I know there are a few different sides of this, but maybe we can just start purely from a perspective of right now, the market for data around real estate assets is just pretty opaque. And can you imagine a world where a player like NASDAQ actually helps to bring more transparency? And how do you think something like that could work?
Yeah, well, I mean, it's certainly our North Star at NASDAQ. So when I think about it, when data is opaque, there's two ways to sort of move that market along. It's either in workflow, so it's digitalizing, automating workflow, so it's less paper-based. And by default, if you're automating workflow, you're standardizing some sort of data.
Yeah.
And so there is a way to go at it from the data side, which is contributory, standardization, data models that all map and match. But it's one or the other, right? You either have to have the workflow to drive the data so that you end up with standard data, or you end up with an ecosystem, really, where the data is contributed and standardized. So there's two ways to go about those ecosystems for markets.
Well, can we talk about, like, from a really practical perspective, like what that actually means? So let's start first with a contributory model. Like, is that actually, let's go back to investments. All the different managers or players are of their own volition submitting on, let's say, a monthly basis through some sort of standardized format. Like, how do you actually do that?
Yeah, so the data is collected, and it's collected quite frequently, and it can be updated, but it's completely standard. So if you're a manager and I'm a manager, we're not both contributing a field and sort of subject to our loose interpretation. And so that way, when someone's looking at the data back, they know they're looking across everything. Now, it's obviously easier on the sort of institutional long-only side, which is where eVestment started. It's much more difficult as you develop data models for anything in the private markets, whether it's private real estate, private equity. But there's still fundamentally a development of that. Meaning, if you're looking at a fund as an investor and I'm looking at a fund as the investor, are we calling it the same thing? So you spend a lot of time on data models, and you can actually take that down to the next level of portfolio company data or real estate data. Are you calling a property the same thing that I'm calling a property? We've probably held it through a different JV structure. It's probably both sitting in a different fund if you go up the alts way, or if you're holding it direct, we might be calling it something different. So it's all about standardization of that data model, which is exactly the development. If you go back to eVestment, and clearly the institutional long-only space is obviously a more mature market, but it shows the sort of development. So now what you see added are things like, now investors want certain ESG information collected. And so then you start getting into a standardization of that. And we're not a rating agency. That's not our business.
Yeah.
We're a transparency. We're in the business of making things transparent. So right now we're hearing a lot of that collection. So we're working on trying to standardize what we're collecting as it relates to that. But fundamentally, whether you're at the asset level, the portfolio company level, the fund level, it's all about standardization so that you can actually have a body of work to compare.
Yeah, and that comparison then really allows you to start to more accurately price the market and make spending decisions based on data as opposed to sort of assumption.
Right, and if you think about it, it's a little bit inverse of where equities was, because equities, the turnover, the trade volume is so high that the data that comes that's valuable that comes off of the exchange is a lot about depth of data versus standardization of data. But in order to get I'm not saying that I think real estate will ever have the turnover that but
a lot of things would have to change to make that
yes.
Not that it's necessarily impossible, but a lot of things would have to change.
Yes, we would have to have a lot of digitalization. Let's put it. What was it? 2 years of automation in 2 months. One of the CEOs said that would be a lot of automation. But But in order to even get to that point, in order to even get remotely to that point, it has to be a standard set of data that you're looking at to make trades, and then again you make your insights based on the same facts.
Yeah, and have you found with that sort of standardization, there's resistance from people who fear that almost like the shining light of the truth could reveal that they're laggards or they're underperforming in the industry? How do you handle that?
Yeah, it's a really good question. I mean, it's fundamentally the question that we wrestle with when we think about digitalization in any market, which is who feels like the sort of opaqueness benefits them. And if there's last holdouts that really believe that there's essentially like an information arbitrage that they can take advantage of, then they're going to be kind of the last adopters of digitalization. So I think I go back to the same point of sort of the maturation. You have to decide if collecting data is what you do, or whether it's actually insights off of that information, making investment decisions off of that information. And so I mean, we think of it sort of in the development process that way. And by the way, there have to be proper workflow tools at sort of the entire end-to-end of the acquisition through disposition process that allow for that. I mean, and that's what we're seeing a lot of adoption in a lot of markets that used to be more opaque around the workflow tools. And that's sort of one of the steps to get there.
So I'd love to talk about that a little bit more as well. I think we are seeing some of that happening in the real estate market. I think a good example of this is actually BTS. And as they get more and more engaged in the transaction process, they almost like by necessity have more and more data related to transactions. But, talk to us a little bit about how you've seen that successfully happen in other markets and how you think it could continue to happen in the real estate market.
Yeah, I mean, one of the things we find with workflow players that have developed something that is getting a lot of adoption, that is automating, that people are using for efficiencies, which is always a good sign, is, do they have data rights? Do they have rights to the data? Do they have an underlying data model that makes the data useful? And then if you don't have data rights, could you anonymize it in a way that you can either give it back to your ecosystem first, or that you can then, monetize it elsewhere, which we could talk about. But it's sort of like a step function of, generally when people are trying to digitalize or automate a process, you don't really think about all of a sudden you're sitting on really, really valuable data. Yeah. But so we've seen a couple of different ways to go about it. Anonymized data sold back or given back to the contributors of the data is an easy way to provide super valuable information. But it does mean you have to have an underlying data model that works for those digitalization tools, which isn't the case in all instances. And by the way, that's fine. If you've automated a process and driven great efficiencies, you're helping to automate the market, but you're not helping to necessarily standardize data. So that's where you end up with several different tools people have adopted, and all of a sudden they don't talk to each other because of that. And so then you end up spending a lot of time building, APIs basically to connect, but you have to be able to connect the data. So we've seen that a good bit, but I will tell you that a lot of the tools that have automated processes are sitting on incredibly valuable data.
And so when you as NASDAQ work, have you in certain instances created those workflow tools yourselves to have access to the data, or do you generally come in and work with a provider who's already doing that aggregation to like leverage the data that they have?
Yeah, we partner a lot. And so I would say my answer is both. And I can give you a couple of examples. We have a liquidity platform for both shares that are held by companies before they list. So where companies can lead transactions, for instance, to sell some of the employee blocks before they go public. So that has had several $1 billion of trades. And that same liquidity platform also applies to funds. So you can actually run secondary funds. So you can run founder-led where they need to have a liquidity event, or it could literally be a fund and you have a market and we have a matching system and we can actually run that transaction. So I think of that as technology to enable. So that's very clearly a technology. But then we also partner with people that are sitting on a lot of data to help monetize that data in a whole variety of ways. So we do dissemination of data. We can talk about the index business. We've got the index business, which helps with that data. And then we also actually have an alternative data business that helps monetize data when people are sitting on valuable insights.
Yeah, so I'd love to talk a little bit about indexes and the alternatives business, because I think I was really interested in the fact that this speaks to not only the way that we could use our own data more effectively in the real estate industry, but the way that we could leverage the data that exists in the real estate industry to help people in other industries make better decisions.
Yeah, so I'll take those separate because they're sort of different opportunities, and I think they're very applicable within the real estate industry. So alternative data is when you're sitting on a lot of data that is proprietary, it's yours, you don't want to sell it, maybe you don't have the right to it, but it gives some sort of leading indicator that would be valuable to somebody else. So a classic example of it, and we have a business that this is all they do. They work with companies, see if there's something valuable in the information they're sitting on, spend a lot of time anonymizing it so that you can't, there's no privacy issues, and then they sell it to people that find that data interesting. So a super easy example is insurance companies that write insurance policies on cars. Their business is writing insurance policies. They actually have insights into new car sales well before anything else is out there about the cars. So that is valuable data. Real estate has a lot of that. If you think about it, a lot of different companies are sitting on some sort of leading indicator, whether it's migration, people moving, there's value in that for consumer, there's value in that in retail, there's valuable data that people are seeing as a result of the real estate data that they're sitting on that's very valuable to other industries. And finding and matching that and monetizing it is part of what we do. So in that case, we don't own the data. What we own is the ability to find the signal that other people find interesting and go help monetize it. So that's what we do in alternative data, and we do have several examples of that where we're working with firms with real estate information.
Really interesting.
And then on the index side, if we flip over to that, and I think this is a really interesting opportunity across real estate broadly. Traditionally people think of indexes as our index business, which is we run the NASDAQ 100, we create an index, there's exchange traded products on it, there's assets, it's indicative in our case of the NASDAQ 100 of what that represents. It's generally, evokes innovation and technology. Although I would argue it's more of like the modern industrial these days because it's, Zoom and other things that we're living in. But that is one way for indexes to work. Another way for indexes to work is to be some sort of tracking mechanism for something where you have very deep data. So for instance, if you have very deep regional data in something around real estate, whether it's multifamily, whether it's office, whether it's rents, then you ultimately can start tracking that. And then long term, you can create traded products, hedging, people can address the risk in their portfolio. And I do think you have to have very deep data. In order to have exchange traded products, you have to have data that has frequent updates, and it has to be validated with frequent updates. But if you don't have the frequency to have an exchange traded product, you can still have a really, really interesting benchmark. So when I look across the real estate landscape, I do think it's not core to people's businesses, but they're sitting on deep enough data that there's pretty interesting benchmarks sitting within people's data.
So do you think this is an opportunity for companies to, a single company to grow their revenue? Or is this something that might require a group of companies coming together in a contributory model?
Yeah, that's a really good question. And I think the answer is both. I think there are certain companies within the real estate industry, and certainly sector specific, that probably are sitting on enough data with a depth of data that they could actually probably monetize and create their own revenue stream. Certainly if a coalition decided to get together and obviously ran, and here's a plug, we could run a data exchange around that data, which I know other people have tried to do. You could certainly have a monetization in a contributory approach. So I actually think it could be either. I think there's interesting opportunities for both, frankly. I think it just depends on the depth of the data and certainly the willingness to make that data transparent as well.
Lauren, why do you think this hasn't happened historically? You know, we've seen these alternative and index models evolve in so many other spaces, and real estate is such an important indicator for so many other industries. What's your kind of read on why we haven't really seen anything like this in the market historically?
Yeah, I mean, to some degree, maturation probably of the industry. I think as long as there is a belief that, going back to the question around transparency, as long as there's a belief that holding the data and the opaqueness gives some sort of information advantage, then people are going to be more resistant. But I think what you're seeing more and more as everyone digitalizes, as everyone tries to automate to drive efficiencies, is part of the sort of exhaust of that is having really interesting and very standard data. So I view it probably like right on the precipice of something that could happen and be really interesting. And I fully agree with you. As you look across the sectors in real estate, it is leading indicators for a lot of other behavior. And obviously consumer spending being, one of the most important one that people track. But it certainly is a leading indicator. So I would like to think that it could happen. It's just a matter of sort of making it a priority, and certainly driving efficiency probably has to happen first. We're seeing that more and more, I think, in the real estate space.
So as we sort of wrap up, I'd love to talk to you just about data in general and the way you think that, almost what you see next across the board with data and markets. As you think about the GIS business, what are the things that you're most excited about? What are the things that you think might be most interesting or surprising? And then I guess a correlated question is, do you think that COVID and the economic fallout of COVID are going to impact either positively or negatively any of the trends we've seen around data collection?
Yeah, I mean, that's a really good question. I think from a COVID perspective, I do think COVID has accelerated the need for automation, for digitalization, for kind of the way we live and work and transact has changed because it is incredibly automated. So any industry that was sort of holding out on the old way, and there's lots of that you could point to, certainly, and anyone that was paper-based is now kind of coming into a new reality. So I think from that perspective, it's probably accelerated, and it's accelerated a lot of the trends that we've seen, because automation, and certainly automation of what I would call the investment process, irrespective of industry, but certainly the ones that were sort of not as mature, are quickly adopting that. So I think COVID has accelerated that. Interestingly, on the data side, data can give so much interesting information, and the pendulum swings. Obviously, privacy around data is very important, and who owns the data, and different companies and different tools have different perspectives on that. But I think what we've seen, interestingly, on COVID is, and certainly, I'm going to use one example. We have an investment in a company that has geo-tracking, and that information has been used to help track the spread and to help contact tracing. So all of a sudden, something that prior to COVID would have probably been more of a skepticism around is now viewed as more of like almost a public good. So there's an interesting sort of dynamic happening with data there. And I won't say that I think everyone's just like, yes, here from a privacy perspective. But I think there's a very, very real understanding of what data and what are you sitting on that can show trends, that can show behavior. We've had an enormous amount of interest and interaction on, supply chain data and things like that. So anything that's top of mind, you can all of a sudden see when you're sitting on data that drives behavior patterns. It's very, very valuable. So I would say COVID has accelerated some of the trends we've seen. To wrap that up, data was already a trend. I'd like to think that at some point in time, people just view it as part of their revenue opportunity in whatever business you are, and it's sort of separate. And certainly automation and digitalization has been accelerated.
Awesome. Well, it's fantastic talking to you. I think that this is such, for me, an eye-opening conversation in thinking about the way that data is not just a business facilitator, but a market facilitator and a revenue opportunity itself. And I actually think those are new ideas, or newer ideas, to the real estate industry. So it's been fantastic talking to you. Thank you.
It's been great fun to talk to you as well. I really enjoyed it.